Welcome to this week's Advisor Team Weekly Webinar. As you know, this webinar takes place every Thursday at 4 p.m. Eastern Standard Time. Now, last week we had the opportunity to talk about frequently asked questions just about the business credit program in general. And today I thought it would be fun to also do a frequently asked questions about financing. And of course, as we go through this topic, you can send email or submit questions through the GoToMeeting, and we can review those during the presentation also. Let's dive in. These slides will just simply give you some visuals here, but we're going to talk about these in a lot more detail. The first thing about financing, and I know we talk about this a lot, but it's because it's one of the more commonly overlooked items and sometimes can feel like a hurdle that you could rush through. But in fact, the impact of not making sure you have a good, solid business foundation can really hurt your chances to get financing. So one of the first things I like to share with our business owners is that business foundation is really critical. When I was a lender, I was surprised how often I declined just based on these business foundation items. You know, a bank, their number one part of verification is making sure that the business is real and preventing fraud and therefore loss. And so it's often a surprise to the business owner that this is one of the very first things that a bank does is verify that the business is real and that the owner can sign on behalf of the company. The business has a lot of public records that are filed. And so this is how a bank verifies that the business is real. They'll look at records like the Secretary of State, business licenses, business credit reports, anything else they can find on the business to make sure that A, it's real, that the information they received was correct, and that the business owner can actually sign on behalf of the business. These are things we probably don't think about because we're not lenders, but lenders will see applications from an owner that's not actually authorized to sign on behalf of the company. How would they know this? Well, typically the entity filing will show them this, but it also could be the corporate documentation. So let's talk about that in a little more detail. We've given a broad overview as to why that business foundation is important, but let's really drill into the details, which is the entity. I mentioned that the entity should be filed with the Secretary of State. One of the more common questions I get is, I have a sole proprietorship and I've been operating for many years. Do I really need to form an entity? When you go and get financing under a sole proprietorship, it's essentially you personally getting the financing. So we do recommend that you file an entity. There's legal and tax benefits to each scenario. And like I said, it's also a way for a bank to verify that the business is real and to verify the ownership. The other thing they'll look at is the business media, Twitter, Facebook, those type of things, websites. It's a great way for them to see what the business does, how long you've been in existence, what type of product you sell, and so on. They're going to review the type of industry you're in, how long you've been in business, how situated you are. Those are all factors they will take into account generally when you apply for financing. The next item they like to verify is the business contact information, the address. They can Google just like us, so they'll see, is it a real business location? Is it a home-based business? Is it a UPS or PO box? The chance of a business submitting a fraudulent application, the chance that that is fraudulent increases by large amounts if the business is using a PO box. So when a bank sees a physical address that's actually a PO box, it does concern them. Even if you're just trying to do an inexpensive way to have a business location, those PO boxes are concerning to the business, to the bank, and they will do further due diligence, maybe even ask for tax returns and things like that. So they're going to verify that contact information. They can check 411. There's lots of ways for them to verify the business information. I know when I was a banker, if the underwriting department was a little bit concerned about the business, they would actually call the phone number. Who picked up? Was it professionally answered? What type of voicemail did they have? All of these are things that they're taking into account when they're making their decision. Lastly, part of that business foundation can also be the business credit reports. They will, even if they don't report back on the business credit, they are pulling them, and they want to see that you're handling that financing that you do have well, at least verifying the business information. So they can see the business name, address, contact information, ownership. Those types of things are on your Dun & Bradstreet report. Okay, so now that I've gotten to that portion, let's actually go into the financing. Let me see if any questions were submitted this far. Nothing yet. Okay, we will keep going. If you do have questions, please feel free to submit those and we'll dive in. Okay, so on the financing portion, some of the common questions, we went over this a little bit last week, but we'll expand more today. The financing portion is really new to a lot of business owners. We're all familiar with the personal credit financing, and we feel comfortable there. But business credit and financing is a little different. Oftentimes, the underwriting standards are a little bit higher. Business is risky. A majority of businesses fail, so a bank naturally increases their requirements for approval. And so it's important that you learn about finance so that as a business owner, you are armed with what you need in order to apply for financing and utilize financing correctly. One of the biggest hurdles I run into with my small business owners is that their expectations for financing are quite high compared with what the market will actually give them. And though it's hard to help portray that reality, I also think it's important because then they really have a clear understanding of what they can qualify for. I think when we have unrealistic expectations on the amount of financing we can get, we make plans accordingly, and then soon find out that that's not going to work for our business. That's a little frustrating, and it can be detrimental to the business. But if you have that clear picture, that finance blueprint, then you really know what the business can qualify for, and you can make choices based on that. I think that alone is priceless. Okay, well, we dabbled into this a little bit. Why don't I qualify for more? That's a common question I get, and it's typically very logical. If we put all the factors that make the business qualify for financing in a pot and we mix them around, it's pretty easy to pinpoint why the bank may have not lended more. Is it a new business? How long have you been in business? What's the revenue look like? Are there any assets? How many loans do you have outstanding? What cash flow do you have to pay them back? These are all factors that the bank are thinking of. How risky is that industry? And the truth is, there may not be a specific lending product for what you want to do. And so therefore the loans, the lines, the credit cards, the revenue financing, those are the typical buckets that a business owner may have to squeeze into, and therefore, not get the financing that you desire simply because the financing market is quite limiting. That said, our program, we do some great things in that we can go for that conventional bank financing, but we also have a good idea what other unconventional lenders are out there that may fit for that specific type of business that you're operating. For instance, we've worked with companies that are producing energy, maybe solar energy and that type of things. There are very specific lenders that deal with that type of financing because it is a specific industry and the lender would have to understand it very well in order to mitigate the risk. So there are specific types of financing for all different types of businesses. It's just knowing who to turn to, where to go, and that's the beauty of what we do, is we can really take out that learning curve. One of the most common questions that bankers get and dread is the crystal ball question. And that usually starts with, hi, I need financing. I want a lot of financing and I don't have any collateral. I don't have cash flow, but I have a really good idea and a really good plan. On top of that, before you look at everything, I want to know how much am I going to get and what will the interest rate be? And even though you're chuckling a little bit, you would be surprised how common it is, or that you have said it yourself and it's hard to realize that you're asking a crystal ball question without the financial statements or without the personal credit report or the revenue statements. A banker can't really give you a good idea of the risk interest rate terms and whether you'll be approved or not. Even when they have some information and they can drill down and give you a good idea of the interest rate, there always can be something that will change a pre-qualification. For instance, we've seen situations where the business qualified very well. We got to the last part of underwriting. They pulled the business credit report and there was something on there the business owner didn't even know about, and therefore the loan was declined. We had to deal with that in order to move forward. So one of the tidbits you should file away is, don't count on that financing till it's done, and understand that they're looking at multiple items through the financing process. They also can't answer that crystal ball question really well until they have the details. And so that's why they typically ask for so much information upfront and throughout the process, is so they can narrow it down. And another facet to that is, as they're reviewing things, if anything raises a question, they of course will ask for more documentation. It's annoying. It's a pain to continually be pulling things out, thinking that you've submitted the last item. Some lenders don't require a lot of documentation, others do. Some lenders on a specific deal may just ask for an application, and then for a different deal, same lender, just because it's riskier, they'll ask for more documentation. But in general, we have a good idea what lenders are looking for. We send through so many, we've tracked those trends, and we're in close contact with the underwriters that we can really kind of walk you through it, take out that learning curve and most of the surprises. Okay, how do I apply it? It seems like such a simple question, but it seems to be the most commonly messed up item by a business owner. How do you apply and who do you apply with? It's always interesting. Even with our trade accounts, you could apply in store or you can submit an application online. But with specific trade accounts, if you apply online, you get approved for more. Fantastic. Or with another one, if you call and you get a representative assigned to you, then you can get an approval. If you do it any other way, you get a decline. So there are tricks to the trade, and it's important to be aware of that and get consulting as you work through the finance portion. The other things, we've talked about these before, but they're always worth a mention since this is frequently asked question day. Things like filling out the application completely, not leaving anything blank. And if you have questions, talking to us or the lender to make sure the application is complete. That alone is one of the most important items that a lender is looking for. Other things may be, submitting all the supporting documents that they've asked for, including what's included in your application, writing legibly or preferably typing in the application. These things really help. I can't tell you how many times as a lender I was just left guessing what the email address was. Was that Yahoo? Was that Gmail? I have no idea because it looked like chicken scratch. So having a legible application really goes a long way. Who do I apply with? That's a common question we get, and that's really how this program started. Is we found that lenders all have different underwriting requirements. They have specific things they're sensitive to. They like specific industries and so on. Therefore, there is a bit of an art to it, and the business owner could either go through it trial and error over the years, or we can consult them through it, take out a bit of that learning curve and make it as easy as possible. But it's important to be aware that there are those variables out there. You know, a bank down the street may approve for more than the other bank, or like a specific industry better than another bank. Let's see if we've got any other questions that have come in. We'll keep checking as we go. Let's see. We've got one here. I will send. Okay, we will keep going. And then, of course, we will send this, put this webinar on YouTube so you can refer to it regularly. So rates and terms, we talked about that a bit, but let's dig into it more. How are they determined? Well, a lender is always going to look at the risk of a deal. I think there's a bit of a misconception out there that lenders will lend based on a good idea or a good business plan. Unfortunately, that's not the case. You know, they don't lend just based on a great idea that's going to make a lot of money. They have to lend on great ideas that have already made money. And I know that's difficult, especially as an entrepreneur. You get very excited and you just know if they would finance the business that it would take off. But unfortunately, because of the high percentage of businesses that fail, that's not the way they function. They are mitigating risk, and they're going to look at, does the business have cash flow, collateral, what's the character of the owner, and so on. They want to look at those items and know they're going to get paid back, know that the business can handle it, and have a general idea of what that type of industry is doing. So they're going to look at these items, determine the risk of the deal, and that is how your rates and terms are determined. So based on the risk. That's why when you see a credit card application, you'll see a range from 0%, a starting percentage rate, all the way up to 30%. And you wonder, where do I fit in that box? And how do I get the lowest interest rate? Well, it's based on risk. If they feel like you have handled that type of credit before, it's a lower risk business that's been established for quite some time, then you'll get those better interest rates and so on. Okay, how do I find out what they are? A lot of lenders won't publish the interest rates because the crystal ball question is so prevalent. They don't want a customer coming in assuming they're going to get the bottom end of their interest rate spread. It's funny how sometimes we hear what we want to hear and we believe we should qualify for the least amount. And so sometimes banks won't even publish their interest rate spreads. You can talk to the banker to get a general idea, but it's even better to submit the information and see what kind of rate or term they will give you. We talked about this. Why can't they tell me beforehand what the rates and terms are? It's simply because they don't have the information. They can't commit to financing before they've done their due diligence. Just wouldn't be good customer service. Let's see if we've got any other questions coming through. I have some. Let's see here. Okay. Well, that is all we have for today. I will post, I don't see any other questions coming through, so I will post this on YouTube. I'm so thankful that each of you have joined us today. Please join us again, prepared with questions. We are always here to help. You can also contact the advisor team directly. The phone number is 800-497-0499. Again, that's 800-497-0499. We are here to help. We thrive on helping business owners. That is our goal, is to help our business owners succeed. So it is a pleasure working with you. Join us again next week for a quick webinar to brush up on those business skills, learn more about business financing, and of course, business credit. Have a wonderful day, everyone, and we'll see you again next week.